Hey guys, I hate to interrupt, but I just wanted to take a moment to say if you're studying for the CPA exams and you like the visual learning approach that we take in this video, definitely check out Universal CPA Review's free trial. You can do this by going to www.universalcpareview.com, or you can click on the link in the description of this video. From there, you could take a sneak peek at Universal's platform, which includes animated video lectures, study guides, and practice questions with task-based simulations that come with video explanations that walk you through the solution step by step, kind of like having a tutor by your side. Okay, enough of that. Let's get back to it. Okay, so the next unique arrangement that we're going to talk about is the principal-agent relationship. So for those of you who are familiar with the context of the regulation exam, this is an area that will be discussed there as well. Okay, so something to keep in mind as you crank through it. So the reality is both sides of this can be the financial reporting company. So we need to know how they are specifically going to report revenue that is being recognized. So in our example, we're going to introduce to you the Field Blazers and TicketStubs.com. So the Field Blazers are a minor league baseball team, and they're selling tickets to their fans, right? The Field Blazers are hot right now. Everybody wants to see them compete for a championship. So their revenue is obviously going to come from selling tickets, right? That's their ticket sales. But they use TicketStubs.com, which is a third-party agent that sells tickets to fans for every event throughout the country. So they're essentially this platform that takes a commission on selling tickets. Okay, so when the Field Blazers make a sale for $400 a seat and TicketStubs.com takes a 10% commission on the sale, the question we want to be able to determine is how will both of these parties record revenue, right? We also want to know whose performance obligation is this. Okay, so on the principal side, revenue will be recognized as the gross amount received. Okay, so let's say that the Field Blazers sold $1,000 worth of tickets, and TicketStubs.com takes a 10% commission. The Field Blazers, being the principal, are still going to record the entire $1,000 as the gross amount. And TicketStubs.com, which is the agent, is going to recognize revenue at the net amount. So that would be the commission. And if we were to determine whose performance obligation this is, it's always going to be the principal's. It's up to the principal to deliver the specified goods or services to the end customer, whereas the agent's performance obligation is simply to arrange for the principal to provide the purchased goods or services. Alrighty, so the exam wants you to be able to identify whether or not a principal-agent relationship exists. So there is a set of criteria that we should be aware of. The first criteria is that the principal is primarily responsible for fulfilling the promise and responsible for providing the goods and services to the customer. Okay, so in our example, the Field Blazers are responsible for ensuring that they're meeting expectations of the fans. Okay, so the next one is that the principal has inventory risk before or after the goods or services have been delivered to the customer. Okay, so in this example, the Field Blazers would have control of the tickets before they were sold by TicketStubs.com to the fans. And finally, the principal has discretion in setting the price for the specified goods or services. So in our example, the Field Blazers will have the ability to set the price of the tickets being sold by TicketStubs.com. Okay, so keep in mind this isn't always going to be the best indicator, as there will be situations where the agent will have some flexibility to negotiate prices. Okay, so let's go through a quick example. Sandra works for TicketStubs.com and sells tickets on behalf of the local minor league baseball team, the Field Blazers. Once the tickets are sold by TicketStubs.com, they are delivered to the customer by the team. Sandra sells 3 dugout tickets to Kent for $1,200 and receives a 10% commission on her sale. How much revenue will TicketStubs.com recognize on the sale? Okay, so being the agent, they're going to collect the full $1,200 in cash from the sale. So obviously they're going to record cash coming in, but that cash isn't all revenue. Only the 10% commission is what they're going to record as their sales revenue. So $120 would be their sales revenue, and the $1,080 remaining balance would be the amount that they now owe to the principal. Okay, so that's a performance obligation. That's going to get recorded as a liability on their books. Okay, so let's determine whether or not TicketStubs.com is an agent in the transaction shown by the analysis of the 3 factors below. So the principal is primarily responsible for fulfilling the promise to provide the specified goods or services. How do we know that? Because it says that the team, the Field Blazers, are going to be the ones that are responsible for delivering the tickets to the customer. Okay, next, the principal has inventory risk before or after the specified goods or services have been transferred to a customer. right? Because we know that ticketstubs.com does not have any control of the tickets before or after the transaction. And finally, the principal has discretion in setting prices, right? Ticketstubs.com does go ahead and agree to sell the tickets at the price offered to the customer by the Field Blazers. Okay, so this is how it's done when it comes to principal-agent relationships.